Well. Got an interesting set of charts right here. Welcome back, ladies and gentlemen. So it looks kind of chaotic across the board. We got ourselves a new Fed chair. Good old Kevin, who's going to be approaching the chair or the position resolving monetary policy, not from a data-dependent point of view, but more of a hands-on approach. The markets are kind of like, is he going to be pushing Trump's idea? Now, look, there's a lot of things happening in the marketplace right now. Everything is just going absolutely crazy. Gold and silver. Quite an interesting move to the downside. $2.5 trillion wiped. And that's the beautiful thing about the marketplace. When it keeps on going up, you're just getting pushed and pushed and pushed to the idea that it can't stop. The sell button doesn't work on gold and silver. They just keep on buying it and they don't stop. You see, the market has a very good way of humbling everyone, and it does it quick and fast. That's why I always say to you, take some money off the table and leave some runners. But when you're buying gold at like $800, $900 an ounce, something like this doesn't really hurt anybody, really. Especially when you're buying silver at $19, doesn't hurt you. And I know you guys have been doing that. So yeah, a little bit of a pullback on gold and silver, but why? Why is it pulling back? You know? Is it because of what's going on in terms of the Fed and monetary policy? Or the fact that Bostic has been coming out saying that we've got a little bit of a problem with inflation and the idea of 2 rate cuts is not something static because inflation itself is somewhat sticky? As Snoop puts it, some of that sticky, icky. Ooh-wee, inflation in the air. Anyways, forget that. But welcome back, ladies and gentlemen. I'm going to break everything down for you. We've got a lot of things happening. There is a disconnect. Big tech is trying its hardest to just sustain the idea that all this money that is being spent in capital expenditure is going to see a return. But Microsoft didn't really give that illusion life, given that yesterday it just said no thank you and is down 12%. And now it's still down 9.9%. I mean, it's been absolutely crazy. I hope you took some money off the table. That's all I'm saying. We're going to break down Bitcoin price action. We've seen some aggressive sales hitting the actual ETF itself. Investors are now starting to rotate to the idea that maybe the yield on the dollar is going to be higher for longer. And I'm going to help you guys understand the story of what's going on with gold and silver from a monetary perspective and why this new Fed chair is going to be working out whether we should have rates higher for longer, or are we going to get any cuts, or is he just adamant that he gets inflation down? You see, the reason why Trump never had him in the first place, or why he never was able to take advantage of being a chair, is because he looked too young and investors wouldn't take him seriously. Well, Powell, he's not a young boy, but he's not too old, but foreign investors look up to the guy and work out whether we should be buying $100 million worth of US debt. So yeah, it's going to be an interesting one. But anyways, is Friday going to be anything like yesterday? Friday is notorious for its treachery. Let's just break it all down, guys, and help you guys make sense of it, you know? Ooh-wee. Yeah, inflation, that's about right. Anyways, let's break it down. Let's apologize. Let's just take a moment for all the people that were buying gold and silver and this big, beautiful rally to the upside. 6,000 was so close. I put a post out on Instagram saying, don't buy gold yet. Don't. And that was on the 19th of January, which was inside of this range over here. Okay. Yeah, gold made a sharp move up. I hope you guys took something off it. But you've missed out on the bigger move, which was from $1,200, $1,300, $1,400 an ounce. The move started when they started to go into an easing cycle. And they've been cutting the rates. And that was a little while ago. That was over here. Where was it? That was over here, ladies and gentlemen. Could have made a nice 2K move, 3K move in gold. If you're looking for something like $1,000 move in gold, then you better have paid yourself because you would have got smacked in the face. $2.5 trillion wipe. Chow chow. What's silver? Oh, damn. Silver. It just didn't look like it was stopping, ladies and gentlemen. But why has silver and gold done this? It's pretty simple. This dude right here, not him, but him, he's going to be approaching the chair itself with a way of working it practically, okay? Jerome Powell and the gang were adamant about the idea that we need more data. We need more data. Government shutdown came into play. And of course, you got this story of what's going on with Trump. You know, he's suing the IRS and he's trying to get ready to do something in Iran with their terms and conditions not being met and his terms and conditions not being met. You think that gold was going to go up, but now we've got this story where gold and silver have already priced in what could be the main hedge. Whether Trump does actually do anything this weekend, ultimately, this move down in gold and silver is, in my opinion, being fueled on the fact that this guy right here is more than likely going to keep rates higher for longer. Going over into some statistics on the probabilities of interest rates being cut, you can see here that going into March, 84.6% at 3.5, 3.75. Okay, going into April, they're at 68.9. Going into June, they're at 34.6, and then going into July, 22.4 on the rates being held at 3.5, 3.75. Okay. But if inflation is still going to be a problem and we're going to have ourselves more war or we're going to have ourselves an issue with tariffs, then those odds and bets are going to be remaining in that 3.5, 3.75 region. That is no good. When you're going into an easing cycle, it means that you're going to make it easier for businesses to put money to work because it's going to be cheaper on the dollar to borrow. We've already come away from the idea of the Japanese yen being cheap because that's not going to be cheap anymore. All right. Negative rates no longer is going to be a thing for them. So we know that cheap money is not going to be accessible for the bigger marketplace. But when it comes to the yields on the dollar itself, investors are now starting to understand that it's going to cost them more money in the future, which is why a lot of big tech is getting smacked across the face right now. Going into it, Microsoft has taken a bit of a tumble to the downside because they didn't do too well on their cloud services. Of course, Google, look at that. Google is so close to its all-time high, clipped an all-time high, and it's doing fantastic. And this is why Buffett is buying up Google, because there is a value, there is a purpose, there is a need. These are the guys that pioneered the story of cloud, okay? So wherever the money is going, it's going into Google for its cloud-based services. Remember, when Google came out with its cloud earnings, they smashed it. Microsoft tried to do it with Azure, it didn't work out. Other companies are going to try and do the same, but Google is the pioneer of it, in my opinion, which is why Buffett is buying this, which is why its price is doing so well against its peers as the Mag 7. But the problem is, when one starts to go, they usually start to follow suit, okay? Now, going into other things, you can see Apple here tops their earnings and record-breaking iPhone sales. Quickly going over into Apple's price action, you can see that it's doing quite, look, I mean, it's so chaotic, this behavior right now. You look at it, it's just shooting up, not really doing too massively well, but we got Nvidia as well, just pretty much stuck. Nvidia with the stellar earnings, and they're just doing so great. They're not going anywhere. And this is a key sign for us going into the actual stock market itself to understand where we are with the behavior of the stock market in terms of volume. You've got to look at it and say to yourself, well, what's going on? Zooming in, you can see down below that we have got quite a bit of volume above average, yet NASDAQ is not clearing anything. And you see this move down here, that is absolutely terrible. That's not great for the NASDAQ. It did a good job of recovering, but the volume has come in above average on the negative side. But obviously, with the tensions that are happening overseas and the idea of what's going on with the stock market, investors are starting to say, you know what, maybe we need to start focusing on monetary policy, because ultimately, if they're not going to cut the rates for us, means that the yield on the dollar is going to be higher for longer, which means that the idea of perceived value starts to come into play. What do we mean by that? In other words, look at the euro. You can see the euro's made a nice big move to the upside. And in my opinion, I did have the expectation that the Japanese were actually offloading on dollars. All right. I actually believe they were actually getting rid of dollars, which is what was fueling this move to the upside. Going over into a couple of metrics, you can see that we haven't had any activity from the Bank of Japan in terms of intervening with dollars, even though they were given the authority from the United States to actually start selling US treasuries. So this is, of course, still an event that could be coming into play. But remember, they will only intervene if dollar yen does actually succeed a significant point. And we go over to dollar yen itself, and you can see that we have got, where are we at? Here we go. It's made a move to the downside, but the strength in the dollar is going to be coming into play only because of what's going on with this new Fed chair, who's going to be looking at things logistically. Bostic's come out saying that inflation is still going to be sticky. 2 rate cuts this year? I don't know, man. It's kind of going to be one of those data-dependent stories. But going into today with the calendar, let's just quickly have a look at what news has just come out. You can see here that core PPI came in at 0.7%. from an expectation of 0.2. What is PPI? It says here is the change in the price of finished goods and services sold by producers. So if the cost of that is going up, it only means that inflation is going to still be a problem for us. And this is why everyone is banging on the idea that we need to make sure that we get inflation down. But Trump wants everyone, or should I say, he wants the rates to be cut aggressively. But when you cut the rates, you're going to be causing a problem with inflation, which is what the problem was with the Bank of Japan. They had the issue of investors holding on to their bonds, but their bonds were deemed worthless because their currency was absolutely, it was terrible. What's the point in holding onto an asset when the currency that you've purchased it in is deemed worthless? So that's why we've seen some movement in the Japanese yen moving higher. Maybe carry traders are coming out of their positions. Maybe risk is a little bit too much in the stock market. But if you've got yields increasing and the prospect of interest rates being higher for longer, then it means that the cost of doing business is still going to be high. So then it grants the question, how are these big tech companies investing so much money and increasing their capital expenditures? At what point does the investor looking at that thinking, should I buy Nvidia? Should I buy Microsoft? Should I buy Google? At what point is he thinking, am I going to actually get a rate of return from this? But what does this tell you? It tells you that these big cap companies, they do have cash and they're just putting it to work. All right. So that's what's fueling the idea of the investor thinking maybe I should be going into big tech and buying it all up. But even if monetary policy is not saying that I should because the cost of business is going to be more in the future, then you're at this plateau where you're like, should I? Should I not? Inflation has gone up. The cost of goods and services is going up and quite aggressively at that. Why would I? You know what? I would not be surprised if the Federal Reserve does decide to increase the rates. That would be an event unforetold, honestly, which is why gold's price has come down, because gold works inversely to interest rates. Given that it is a zero yielding asset, you don't earn holding gold. You only earn based on the spot price you get in at or whatever price you buy it physically. So if you buy gold at $1 and it increases to $2, you've earned on the spread of it. You've earned on the price of gold. But when it comes to dollar, you generate a yield. That means I can hold dollars. And if I go and put those dollars to work in a yield appreciating asset class, such as the US debt, then I'm going to be picking up a yield. So if the interest rates in the future are going to be higher for longer, that means I can go over to the bonds market and say to myself, you know what? All right, cool. What's the 10-year at? Well, the 10-year is currently at 4.25%. I may as well go and pick myself a yield of 4.25% and lock it in and go and buy myself 10-year bonds, okay? That's why the bonds are holding out. With all this chaos, investors are like, you know what? I might as well just get into this because gold and silver have just been pumping up, and it could be prone to changes in geopolitical events. It could be changes in monetary policy. And based on the way these speakers are going, doesn't look like they're going to be cutting the rates anytime soon. But they're trying to keep the idea that maybe if we are going to be holding the rates, then you're going to get some yield locked in right now. But there is a possibility in the future that we could cut. So it's making investors say, you know what, rather than missing out on the opportunity, I'm going to quickly lock in some yield now, because if they cut it, I'm going to be generating a lower yield. It's a chaotic, beautiful mess. And we're trying to work out if the investor is confident in the way that monetary policy is going to go forward, which grants the question. Bitcoin up, Bitcoin down. Let's have a look, shall we? It's come down But don't worry, ladies and gentlemen. Hold on to your Bitcoin. Hold on, because it's going to come back. It's going to go back to the all-time high, and we're going to get the Tom Lee projection of $180,000 of Bitcoin. When the brother is buying nearly $50-60 million worth of Ethereum, he can say whatever price he wants. He's got the cash to sit back and absorb the drawdown. But given that 90% of cryptocurrency is purchased on leverage and people have the anticipation of higher prices, yeah, you're fighting the idea that Bitcoin, your one Bitcoin that you never gave sweet damn FA about, macros, is now subject to it. That's the problem. Going into it, all you can see here, it says that Bitcoin's stuck in a rut after Walsh pick as ETFs shed billions. It says here, Bitcoin held its near 2-month lows Friday after Donald Trump named Kevin Walsh as the next Federal Reserve chair. Shouldn't this be good for Bitcoin? It should be great for Bitcoin because we're going to have a guy who's going to come in and cut the rates, but that's not what he's going to be doing. He's going to be looking at things from a practical point of view. Inflation's a problem? Okay, cool. Keep the rates as they are. And if inflation is really a problem, we'll increase the interest rates. All right? So Trump's little, oh no, we need to cut. He's probably been sat down and told, listen, we're going to have a problem with our dollar in the future. Do you want to be in the same position as the yen, where our dollar is deemed worthless? Your dollar has not got any purchasing power, guys. Your dollar is deemed worthless. Look, and we know that. Look at it. It's just flipping dog. It's 96.34. Your dollars are only worth something when they're above 100. Why? Because it means there is an appreciation, which means that you've got yourself purchasing power, which means that you would require less dollars to purchase assets in dollars, okay? But your dollar is deemed worthless right now. So what Trump wants is he wants the dollar to get smacked. Okay, he wants to cut the yield so it's cheaper to get people using dollars. All right? But they're not using it. And events like geopolitical events could stimulate investors to get into dollars. But the only way that you can get them into dollars is if you offer higher rates of return, which is why they're holding off on the rates. They need to save their currency. Japan have done a good job of sorting theirs out with a little bit of a rejection. Okay? But that's not sustainable, okay? Quickly going over into other assets across the board, looking at the NASDAQ. We got NASDAQ. I mean, this is wonderful, isn't it, guys? It's just great. It just narrowly missing the all-time high and unable to claim that. And then, of course, geopolitical events could actually bring NASDAQ lower, but this is being held by big tech, but small caps are succeeding big tech. And that, or big caps, so that is a bit of a problem. Money needs to be going into big tech, and it just goes to show how fickle investors are when they're dumping Microsoft shares like this. I mean, it's a big gap down overall, and you've got another gap down here, which means that we could be losing the 420 region and 400 zone on in Microsoft to come and fill that gap. I would say that dip buying opportunities would be had if we do see Microsoft come back down towards 345, but be very cautious because the only next area that I would see Microsoft heading would be $309, and that would be on the conviction that the Fed is not going to be cutting rates, they're going to be holding rates, and that there is a bit of a concern on the capital expenditure from these big companies as to whether or not dividends are going to be paid in the future. Quite frankly, Nvidia is the only one that's going to be saving the tech market, because if their earnings come out and they don't show that strength, then investors are going to be like, forget it. It was a bubble all day long, and they're just going to dump everything. All right. So just be very cautious when you are actively taking into consideration buying stock at these overvalued areas. Going into the BlackRock ETF, you can see here a couple of hours ago, we have seen quite a bit of movement. Let's have a look here. So we have had a significant amount of Bitcoin being added to Coinbase Prime Deposit. Usually when you see this, you want to say to yourself, are they going to be selling it now, or are they going to wait for price to recover back up? Looking at Bitcoin price action right now, we can say that it's been a bit of a problem given that it has lost the 50 EMA, and there is a possibility that overall we're going to see the drop, the retrace, the continuation, because Bitcoin has one last zone in the chart where support in principle would come into play, where the idea of bids will be getting exercised quite aggressively. Going into the idea of bids, you can see here that we have got non-stop, Bitcoin has been in bid side mode, and that is represented by all these bid purchases. When they say they're selling Bitcoin, it's the wrong participants selling, because it's dudes right here that are picking it up. Someone went bid side, $88.93 million worth of Bitcoin, and that was at 1:30 this afternoon. Well, 13:32. All right. So someone went bid side. One individual order picked that up. Okay. And you can see each of these bars is a representation of where the spot buyers are coming in. Because if you're buying up that much Bitcoin, you can absorb the drawdown. Let's be honest now. Okay. So just take that into consideration when you are thinking of buying Bitcoin, going into higher timeframes, because we've got a new weekly candle coming into play in 2 days' time. And we've also got a new monthly candle coming into play. And it turns out that this month in January has been absolutely terrible. And I'm going to be saying this to you now. Bitcoin will come back up to this. All right. It's going to come back up into this range over here. All right. But first, they need to buy some of it up. That's what they need to do. The market's logic would get triggered at around this 70,000 zone, because it's an area where they had aggressively made a move from that point. So if Bitcoin is on that trajectory to keep on going up, 70,000 is a spot that we would want to see Bitcoin try and hold. But as it stands right now, it looks like Bitcoin is rejecting these key areas. And if it does decide to lose this low right here at 80,000, we're going to start going into 75s. And that's okay. Why would it be wrong to buy Bitcoin on the cheap? Or is it because people are buying Bitcoin at 110 and they want it to go up? This is what you got to be positioning yourself for, because Bitcoin is aligned with the macros. If monetary policy is going to be at the levels that it's going to be at, and they're not going to be cutting anything, that's going to have an impact on Bitcoin. Some people will be buying Bitcoin with borrowed money. Well, I'm not going to do that now, because I know it's going to be higher for longer. Mortgage rates came down and they ended up coming back up again. So it just goes to show that there is a lot of sporadic behavior in the marketplace, and there's nothing consistent. Which is why when it comes to taking trades on a day-to-day basis, you've got to wait for a move to happen and then ask the question if the move is true or not. And if the move is true, then it will continue in that direction. Place your bets, probe your bets, use light size, and then happy days, run it up. You're in very difficult times. You're in very difficult times, because the idea of perceived value is being engaged across the board. Investors are like, is it too expensive? How many of you believe that Bitcoin is cheap now? Be honest with yourselves. How many of you believe Bitcoin is cheap? You'll all say that it's not expensive enough. It's not high enough. Do you think Bitcoin is cheap? Hell no. Bitcoin is not cheap enough yet, in my opinion. We haven't yet had the event. All right, yesterday there was around $1.89 billion worth of liquidations that came into play. All right, cool. That's a lot of flavor. That's a lot of people getting liquidated. That's the futures markets, all right? But how many of you actually believe that Bitcoin is cheap enough? I want to know. Not cheap enough. There we go. Here we go. Fading to the 75K, but price action is treacherous. It certainly is. Price action is treacherous. Tino, the correlation between Bitcoin and Dixie is interesting. As the dollar falls, Bitcoin falls. What does this mean? It simply means that investors, right, let me put it like this to you from this perspective, okay? You've got zero appreciation on your dollar. Purchasing power is zilch because it's at 96. Anything above 100 means that you are getting an appreciation of dollars. This is where the perception of value comes into play. Quite simply, if euro is high against the dollar, it means I can buy myself a lot of dollars with less euros because my euro is deemed as valuable. When you see Bitcoin making a move to the upside and the dollar dominance going up as well, what you will find is investors will be buying Bitcoin with their dollars, and the dollar will be going up because investors will be seeing that the appreciation of the dollar is giving them that little bit more purchasing power. Even though it's below 100, from 96 to 97, that is still deemed as a little bit of purchasing power, which means that you do need lesser amount of dollars to buy Bitcoin, okay? So when you do see the disparity between dollar and Bitcoin going up, it's not because Bitcoin is just outperforming. It's because participants are coming in using dollars to buy Bitcoin and effectively buying and selling it, but taking advantage of the spread or the appreciation of Bitcoin on the back of the idea that their dollar is valuable because it's going up in value. What doesn't make sense is to buy Bitcoin when your dollar is shooting up, because the dollar will take precedence overall. But when you see the dollar going down, that makes sense to buy your Bitcoin, because you want to see an appreciation of your fiat to an asset that will increase in value. But when you see them both going up, it's not a normal marketplace. But what's going on is players are taking advantage of the continued appreciation. So they're like, oh, Bitcoin's going up and so is dollar. That means I can start putting my dollars to work because they are appreciating, which means that I'm having to pay less as the dollar goes higher. So I don't need to retain as many dollars to get more Bitcoin, for the better word. It's quite a complicated scenario, but you'll understand it when you see it happening in real time. All right. The dollar will always reign supreme over it. All right. Because it's the bigger asset class in principle against Bitcoin. All right. I hope that makes sense. Tino, what are your thoughts about NuScale Power Corporation stock? Trump mentioned he's interested in nuclear energy. Of course he's interested in nuclear energy. TSML, what do you think they're doing? Going over to Japan. 40% of all the money going into Japan is from foreign investors to build factories. TSML is building a factory right now in Japan. Japan have just reactivated one of their nuclear reactors. Why? Because when you're building a data center, you need the power to sustain it. And only small molecular nuclear plants as such are the ones that are going to be able to source that power for the data centers. So like we gave you quantum computing, go and research small molecular nuclear companies that provide that power source, because data centers is where it's at. Anyone that knows an electrician, tell him to get involved in networking and, of course, data center development, because those guys are going to be in demand and they're going to be able to charge a killing just to get these things sorted out. Right now, it's all about the infrastructure for AI. We've got the software, we've got the chat GPTs, we've got all of that. Now we need to focus on building it so it can be upscaled, but we need the power source. And that's where nuclear power comes into play. All right. That's why Trump wants everyone to deactivate their nuclear stories, because they want US to have the main power. But quite frankly, China's the one that's got 48 reactors. The US has zilch. Where's the US going to get its power from? They ain't going to be able to sustain this. They need nuclear power to get data centers going. They're going to make them into a... You thought solar farms were crazy. Wait till you see data center farms, man. I'm telling you. Wait till you see that. Anyways, TSML. Taiwan Semiconductor Company. Tino, I've seen this. Sigma events. Yeah, which is supposed to be basically never happen. How can trillions of dollars move in an hour like an altcoin? Look, gold and silver, okay, have been up on hype, all right? On my Instagram, okay, I did this video right here, all right? And it's quite crazy because it's now nearly got 175,000 views on it. Didn't expect it, but I said, don't buy gold yet. Yeah, don't buy gold yet, because they were going to pull this event. They were going to do something like this because it can only go up for so long. Everyone was like, ha, 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 it's going up, ha, ha, ha. I don't see no one talking about that now, because the event has happened. They've been shaken out. And gold is still more than likely going to be pulling back. Look at it. It's pulled back. That's on the monthly time frame. Go to the 4-hour chart. You can see it's pulling back ever so slightly. And this is a sharp pullback on gold, even sharper on silver. Okay? Just do something about it. Take something off the table, because a lot of you are probably buying it on spot. When we're talking about physical gold and silver, you can't go wrong with that, because your dollar is deemed worthless. Do not confuse the difference between physical gold and silver and the paper value on spot. Don't get it mixed up, all right? Because you can walk into a jeweler's right now with your flight with 5 kgs of silver. He's snapping that off you, okay? You can get your gold bars and they will snap it all up from you, okay? Because they know that they got people coming in buying it and buying it. It doesn't matter what price it is. But when you hold the physical gold and silver, that's where you are in that good hedge. The fluctuations are irrelevant, because we know already the purchasing power of the dollar is dead. So whatever price of gold it is, whatever silver's price is still doing better against the US dollar. But when you're trading it on spot, you love that leverage, this is what happens. And then they swipe everybody and kill everyone's confidence in it, and they stay away from it and they bring it back up again. Oh, it's going to get ready to go up again. Happy days. They get back in and then they screw them over again and again. That is a big wipeout across the board. So when you do see these phenomenal Sigma 6 events, okay, where you do see gold and silver not stopping, all right, you can't help but take advantage of the volatility. And if you do, happy days. Pay yourselves, get some money out because you're not in normal environments. Gold goes up on geopolitical risk. Gold goes up on the easing policies in the Federal Reserve. Now we've had a little bit of a pause on the easing policy because we've got a new dude that's going to come in and do things practically and not data dependent. Inflation is still high. Fuck it. Keep the interest rates high. Done. With the possibility of maybe increasing them. That's not going to be on Trump's agenda. But if you want to get inflation down, this is what we need to do. Gold will go down. But gold is getting ready for the next hedge. You've heard me say this over and over and over again. When gold drops, they're preparing for the next hedge. They've just released on this. Retail is buying it all up. Yes, central banks are buying it, but they're buying it when it dips. Okay? They're buying the physical, but I doubt they're sat there on their exchanges buying it on spot with leverage. Some of the futures guys are. Options traders are. But banks are buying the physical stuff. That's why there's a big difference between the price of it physically and paper. Does that make sense? Tina, does this represent a true chop or will it bring it back up again like nothing happened? It all depends. Tina was the one who called 20%, 30% drop in silver on his 79 video crash. Look, I want to see gold and silver. I want to see silver down at the 60s, 68s. That'll be a good spot for silver, in my opinion. It'll be a great spot. All right? But let's see how it plays itself out. You know, certainly wasn't buying up here. No chance. You know, and there's the proof of it's there, ladies and gentlemen. Just go back and look at the live streams before when silver was at $19. Just go back to the live streams around April 2025. We were screaming for it, ladies and gentlemen. Even before that, actually. Not 2025. Even before that. Yeah, it was way before that. $19. Go back to March 2024, Christmas time. Around 2024, those live streams, they're up there. I was screaming at you all to buy silver. And if you did buy it, congratulations, man. Because silver can drop all the way down to 68. You're still laughing. All right? Cool. Thank you, Tina. Made profit on BTCC with that silver call. You made profit with the BTCC. Happy days. And if you are not with BTCC, anyone that does join it with the Traders Reality link gets an exclusive 15% deposit on your first deposit. All right, you get 15%. That's exclusive just for us. And of course, you don't need KYC or VPN, and you do get to trade tokenized stocks with BTCC only if you join with the Traders Reality link, which is pinned to the top of the chat. So get yourself involved and check that out because you can trade NASDAQ, you can trade gold, you can trade silver and stocks. So it's a good place for you to hedge. Trust me, it's a good place for you to exploit volatility when Bitcoin doesn't do anything, but silver does, and gold, all right? So just take that into consideration when you are trading today, okay? Tell me what price I should buy Bitcoin. I've been buying the dip, but would like to go hard, but lots of calls are for 74 or lower. Look, listen, you buy the blood, okay? But can you absorb the bleed? That's the question. You can buy the blood at any time, but can you absorb the bleed? There is no physical price point. The thing you got to look at when it comes to Bitcoin is simple. When the masses observe the price action and there is chaos across the board, when they're all saying that they're selling the Bitcoin, they're not selling the Bitcoin, they're bidding for it. They buy it and then they send it back up. You want proof of that? Go over to this chart over here. In front of you, smart money, dumb money chart. What does it show you? It shows you that when the blue line goes up, the stock market goes down. Okay, that's simple right there. That's the SPX. Blue line's going up. That means smart money is buying. Why does the stock market recover from crashes 100% of the time? Because they engineer it. They buy when it drops. Everyone's selling and selling and selling. You can't sell if no one buys it. You can't buy if no one sells. What, you think Binance is going to be giving you your profit? Hell no. It has to come from someone else. As the old saying holds true, one man's fun is another's hell. Okay? So what we're seeing now is the blue line starting to make a little bit of a move up. Maybe the stock market's going to be pulling back. Maybe we're going to get a black swan event. Whatever event it's going to be, they're going to crash your market, reset, and then bring it back up again. Just go and study the history of crashes. They never, ever, never recover, not recover from it. It's got a 100% success rate every single crash. 1929, crash. All right? Subprime mortgage crisis, crash. And that was the worst one with household bank names getting put in the bin. They come back every single time. So you just got to say to yourself, can you absorb the blood? That's the question, okay? With that being said, mad love and respect. Hope that makes sense to you all. Be safe. Don't be sorry. Be happy that you are in probably one of the most exciting times in the marketplace. And I'll be tuning into you all next week when we get back into the flavor of things. All right? Take care of yourselves and pay yourselves too. Mad love and respect. Peace.